Just want to make sure that you guys can hear me here and make sure that I'm live as well. So I'm going to be testing out the microphone again real quick. Okay, see what kind of opportunities we can find. Let me just get a good playlist going. Let's see here. Where are you, M? Let's do you. Alright, good morning everybody. Welcome back to another live stream. So today's August 1st, the start of a new month again in the markets. And I gotta say, it's been quite a journey since I started live streaming consistently. I've been trying to go at it every single day, and every single day I'm trying to call the market, and it's very, very challenging, as you can see, because there's lots of things that I'm still learning about in terms of how to trade within a phantom leg, as well as using the structure, when to use the structure that is given to you at hand to lead you to a target, and how to align that with higher time frames, buy or sell programs. It's a lot of information, and this is why, quite frankly, a lot of people get mixed up, confused, upset about their trading strategy because they want like a cookie cutter approach, and they want things to occur based on what their model says, which of course trade your model, but your model has to be adaptive to the conditions that we have. Like for example, if you always have a bicycle to do deliveries, right? That's going to be your main hustle. Uh, your bicycle is going to have a tough time doing deliveries when it's winter season, when it's snowing outside, when there's a blizzard, or if it's super rainy outside with thunderstorm conditions. Not that it can't work, but it's going to be very challenging to do so, and sometimes that's why you might not see your model pan out. That's why it's very challenging to navigate these markets. But I've been trying to call it out every single day, trying to see where we're trying to go at, and it's really interesting how it targets certain levels that we outlined here in the live stream. So that's what I want to continue on improving on, so we can get into better entries. So speaking of entries, one thing I would like to point out in the higher time frame here is that we've been tapping all these pools of liquidity here. See that we have mentioned. All of these lows were taken, even these ones down here, even these were also tapped on the Dow Jones. So the Dow Jones reacting very outwardly, let's say, much more of an expansion than the US 500 and the NQ. So one of the sisters is misbehaving, and it's pretty much the Dow Jones reaching out for all the sell side liquidity, leaving behind all these sell stops that we were going to refer back to for a buy program to anchor our B leg. They're not looking so hot in terms of like a low that we can refer to expand higher. As well as something else that I want to point out is that we had this huge higher high to lower low compared to Wednesday and Thursday. So when things like this tend to happen, it's considered an outside range because we've traded above and below previous day's lows and highs. So that's a huge indication sometimes if we zoom out to the daily chart. That's sometimes an indication that a market reversal can occur very, very soon. Something like this, where we have a low to high, and then the next day we have a break on the higher high and the lower low. It's not like an inside day where it indicates that the market will continue its directional bias. So let me see. An inside day will look like something. Well, we haven't really had an inside day really. I'm looking. Well, none of these charts sent to show you an inside day at this time. So um, I was anticipating a OTE play here, but something that I've been concerned about too was the fact that I've also had to quickly mark up my monthly chart because we've started a brand new month. And if we look in the 4 hour, I always say that the best OTs are the ones that are stacked up together, the balanced price ranges. So we had one here. Yeah, I'm not sure if you can see it, but from this low to this high, it was balanced and it was stacked up against this higher time frame, high to low, low to high. So I would have preferred to see this react as of an OT entry to take us to higher prices, right? August, so I haven't even, oh man, let me see. Which reminds me, I have to look into the August seasonal tendency. See that August tends to be a period of consolidation for the year, so it's going to be a very, very challenging month. August is usually the time where a lot of people go on vacation. I think even the government goes on vacation too. So um, there's still trades nonetheless, but it'll be kind of challenging. But a little bit of a tough month ahead. In terms of news, I don't think there are any since we had like the big ones already show up this midweek. I mean, we have 10 a.m., so I'll mark that up for the charts here. 10 a.m. news at 10. But all in all, I'm not liking this price action at all. We're still in search of that B leg because we are still technically in a higher time frame buy program. Super duper higher time frame. So let me see here. What can we show you? Oh, right here. This low to this high, super duper higher time frame buy program. So we could even see something like that react too. Let me mark my fibs down so we can mark it down to that level. It's the 2nd of July low. Two. There you go. So we're still technically in this huge buy program. So there's a bunch of other lows that we can refer back to here and looking to see if we can get that B leg over so that we can finally get that expansion that we needed above 25% to continue to higher prices. But because we have a lot of sell side here that, what should we call it? That was reacted off NQ, I'm not feeling so confident that we might even reach down to those levels. Like, this is very dangerous stuff here, guys. Added to the fact that we have that reversal change condition, we could start seeing price turn over into a bearish market. Quote unquote bearish, right? But it's still actively seeking the deepest discount low to get into continue this buy program. So where is that second up right here? From this low to this high is a whole buy program, right? So we're looking at the old previous lows to see what kind of liquidity is left over to anchor our B leg, but because all of these were already referred to by the Dow Jones and not by NQ and ES, this is a very Six Sister approach where the Dow Jones has already ran through its liquidity, so it's just a matter of the other two to catch up. So if that's going to be happening, we're going to be seeing all those be taken, low probability anchor points from which we can see expansion up higher, and then we could, even though we are in this higher time frame buy program, now I would like to see a turtle soup entry have occur below the low of this because it represents the low of the month. So we could see a turtle soup here and then continue up higher for higher prices. But yeah. And I'm also trying to see how low. Let's see how low can we go. I just want to make sure I'm marked up here correctly. 7th of June. Yes. Yep. So the whole program here is a buy program. So again, any excuse to get down lower. So a short-term sell-side delivery would be key right now, would be key. So we would be anchoring our A leg to an old high, which was London buy-side liquidity. Did we get a reaction of that? We didn't. There was no cracking correlation. Um, we're still looking for a deep discount. But we can also react off a discount area. So for example, if we subdivide, let me flip my things here. So since we're in this higher time frame buy program, right? We have a 0, 25% level, and equilibrium of that higher time frame buy program. If we divide the equilibrium and the quarter, we'll reach a level around here, which represents the event horizon between the two levels. So from this low to this high is considered discount. If we find some form of support, which we haven't, this high in this area here to this little zone above equilibrium, this area would be discount. Sorry, will still be a discount zone. So because we're not finding support, I do believe we might even head down lower below this level. So if we take our fibs, mark it as such, I still think this could be a potential draw down here. Okay. So if price can reach something like this all the way down here, continue the selling, and even head down lower, since all the liquidity pools that were previously referred to have all been already marked down by the Dow Jones. So let's see here. So now this is what I consider us trading into the phantom leg, right? Because there has been nothing settled in stone. So from this high, as it's been traveling down lower, we were looking for our B anchor point, right? But it's traveling down lower, lower, lower to discount, and is not finding that area of support. So in the meantime, we are short-term bearish, long-term bullish. And until we find that cracking correlation on discount, which I think will occur all the way down here at the low of the month, we'll see a higher price of form. In the meantime, um, we're looking for all pools of liquidity to be taken. Lower, lower, lower. Okay. Let's see. And for example, here, this MI up, this MI bullish signal, I would have been taking this as a buy, like buying a turtle soup, low to high up there. Nope. Wouldn't trust it. Wouldn't trust this at all. Now we have the new balanced price range. As I was saying, we have a new balanced price range action occurring. So from 9:10 to 9:15, I'm sorry, 8:45 to 9:15, we have this. Check this out. We have a high to low, lower high, lower low. So this, not this one, the red one. So we had a tiny, tiny little breaker here. Now this is a structure that I support, right? Because it fills in with our with our, I guess, perspective that we're going to seek lower prices. So if we're going to see lower prices, and look at this bullish breaker, which was this little block right here of price. See how it was traded to, and then treated as an inverse, but it still wicked up into the SIBI up here in the form of an institutional order flow entry drill. So it was a quick wick, quick repricing, and immediately sold faster into this external range liquidity. And then we're gonna tap these lows. Let me mark this up before I forget. Path. I feel like we're gonna treat this as turtle soup, right? External range low from this green area. We're gonna trade up into the high of this red box, the 15U, and then continue this trend of going down lower. That's what that's my prediction. 2025, right? Turtle soups, up to these highs, and yeah, because we're still looking for that deeper discount retracement. So that's the hypothesis. It's just a matter of seeing where we're gonna go. And we also have red folder, so that could also fuel the well, that could also fuel the move to head us down lower to event horizon. Because right now we're still in this higher time frame phantom leg. These are the times where trading what you can see is kind of like it's kind of like the way trading what you see. And right now what we see is support for either mostly lower prices. So we're gonna keep this be until 9:30 for it to reprice up higher, act turtle soup, head down lower. This has to all be accomplished before the 9:30 open. Something that also sparked my interest was the dollar. We were feeling very bearish. We were looking to aim these external range liquidity up here, but the moment it misbehaved, and this high was supposed to be our OTE lower, but instead it created this expansion up higher. And yeah, now we have these new areas of that are balanced. So we have a bullish breaker from this low to high. So now that we've traded above it, we'll treat this as support. Okay. The biggest challenge right now is that we also have a type 2 dealing range from this low to this high. So this tends to be the relative strength or the strongest pair. Let me see if we can compare real quick to a bit low, higher low. No, every other pair tends to be in tandem right now. Look at that, Australian dollar, high, higher high, low, higher low. That's SMT divergence, especially on the future currencies. So we have this expansion up higher. Now it could behave as a reversal, like we could aim down to these lows for low resistance, but this bullish breaker can still act as a discount array to treat price to go up higher. Okay, we've also traded external range liquidity. So we take this high to this low, that's our open flout. Price opens, dips down below the open flout. So we have sell side now. So we could anticipate to see a purge and revert. So we'll purge these lows only to revert back up to these highs up here. But only 10 will tell, right? This has a deadline up till September, so I'm in no rush in seeing that manifest, to be honest. Back to our analysis here on US 100. We're looking for price to open up soon. What are other things that we can be looking at? We could be looking at intermarket analysis. So we had this morning's London lunch buy side liquidity. They all tapped it. So we have a low high, high higher high, high higher high. So everything's tandem here. I would have been also interested in seeing the next form of liquidity would be the London buy side liquidity, all the way up here. But so price would have to really gravitate towards that level so that we can finally get our minor sell program. In the meantime, we're still in this higher time frame buy program right now. I wonder there's another. Let's see, we have 9 o'clock. Okay. Excuse me. We also have this. I'm getting a little ahead of myself, but we have our CME open from this morning, just now. So another thing that would be awesome to see would be taking the low here, right? And then say we go all the way up to these old highs on CME open, right? CME open, we can trade all the way back up here. Now market red. We trade up to these highs, we get an SMT divergence, boom. Now we're inside a short-term sell program. Price retraces up to 75%, closes below 75%, while taking that trade over to continue the discount price, the discount rally. Now we have a confirmed sell program, mini sell program, and every structure that's in place within that sell program, we're taking it. So if there's a signal here that says that we should be going bullish, I'd rather take the inverse of that and continue lower. Right now, it's still kind of low probability, to be frank, for anything, because we're not in a confirmed buy program. We're not in a confirmed sell program either. We are just in a higher time frame buy program, looking for its little anchor point, its little B leg. Okay, see that? So it looks like we're using the external range liquidity from this low and just using that as resistance. Price does not want to go up there. Does not want to go back up there. So this could demonstrate to us speed that it wants to get somewhere quickly with reprice down. And right now what we're seeing, the low-hanging fruit, is the event horizon. So that's where you can see price reprice to fairly quickly, especially since it didn't want to trace up that high. I don't know if it'll be before 9:30, but it'll be really cool to see it. Well, if we also have this external range liquidity. So let me delete these little flag icons because we have no confirmed yet. And if it was up to me, the old me, I will definitely be trading this right now. Like, oh, okay, so if it wants to go down quickly, let's get on this order block, set ourselves a a 10 handle stop loss, send it lower, reach down to here. Let's get it. Actually, this doesn't sound like a bad idea. Also notice this, look, low, lower low, low, lower low, but low, higher low. So also a bunch of people are probably looking at this and thinking, oh, it's gonna go up, it's gonna go up. This is our SMT to go up higher. I strongly doubt that. Haha. Okay, so something that I'm seeing is, look at this. So because we're in a higher time frame phantom like, right? We're trading with what price gives us. And what price is giving us right now? This whole structure. This whole composition of price. So the open flout from this low to this high, what is that? The short-term buy program. Okay? We're going to be referring to all lows here. What do we have? An important low. This one. Why? Because I think it's the midway point from the open flout from this low to this high. So if we're going to refer to this low as an important low, key low, look at how price behaved down here, right? Having low, lower low, and we just saw from US the Dow Jones we have a low, higher low. So isn't that in a sense S&P divergence? Now check this out. Let's play the theory that we're going to go up higher. Where did my order go? Come on, don't be shy. We could be seeing something like this to occur. That too. Up here. See, wouldn't that be cool? And then we could have treated that as something to go up higher. But look at what just ended up happening here. Very interesting price action. Okay, so we now have that yes, cancel this. So we finally have the 930 open, right? And what are we seeing right now? We're seeing a low high, lower high, lower low. Low high, lower high here. Oh, sorry about that. Let me say low high. From here, 8, 9 o'clock, lower high, lower low. So we'll take this low to high here. Extend this out forward. Now we have a type 2 dealing range here. And so from this high to this low, take OTE. Same thing here, high to low. Bullish breaker right there. Okay, are we seeing price eagerly wanting to go down to event horizon? We're also reacting off now this external range liquidity. Something I'd like to add too is that sometimes these balanced price ranges, right? Once they become an inverse, I don't want to see them hit medium threshold. So when this high was created, it didn't even hit the medium threshold of this balanced price range. after we're looking for lower prices, and it traded out below it, went back up. Why is this bullish? Because we had a high to low, right? Then we made a lower low, but a lower high compared to this high here at 9 o'clock. So the composition is bullish breaker. But since it traded down below it, now we're going to treat this as an inversion. The real breaker is here. So we've tapped the event horizon between the equilibrium point and 25%. What's the next level? 25%. And the level after that, the zero level. So there's lots of room for downside. It would suck if the whole session will just be going down, 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 and no entry will be provided. Actually, that would suck a lot. Wouldn't that make you feel like you just wasted your time? Looking at price. Okay, so what would be our next entry? Our next entry would be up to this bullish inverse breaker, right? Because if we take our fibs and anchor this dealing range from this high to low, where do we want to enter? We want to enter on premium, right? If you want to sell short. So you want to sell short, enter on premium. This is our premium array right here. Remember, we also have red folder news, so I'm interested in seeing the red folder news uh, put price down with a much more higher velocity to reach down to the zero level, but we'll see. So it's 9:40 now. Let's take a look at M&Q. See what kind of opening range gap we're looking at today. Well, there is my. Okay. We'll bring you right up. Not you. Close. Open. See that? Now what about the opening range electronic trading hours? Open. There you go. So we have this SIPI here. Didn't even react off the lower quadrant. So that shows signs of speed. Right now lower. And that's a symptom of speed. And this price going down lower. Yeah. I mean, I think we're cooked. I don't see any other. Well, we saw on M&Q the other labels, right? There is other sell side, but it's just gonna be not trustworthy to think that it's gonna have an SMT reaction there, because they already had an SMT reaction. Which reminds me, I should probably bring those markings over there. So if we do this, right, I'm curious on how we will treat these SMT lows as resistance points to get into good other good entries. So we have 1, 2, 3, 4, 5. Okay, so now we'll copy these over. Oh, come on. Hmm. I wish all these levels were just transferable, you know? Okay. Instead, I'm gonna just have to eye it. Oh, interesting. Look at that. We had an SMT low at the time. That was a little bit annoying how it just disconnected like that. What the heck? Okay. Okay. Then we had these levels, I believe. And look at that. Old areas of support now turned resistance, right? Old low. Look at how quickly it repriced to. So that would have been a nice entry. We didn't even rebalance this either, so or maybe it is balanced because on this sell side leg, this came up as a sell side buy side delivery, immediately repriced, have that little gap there. So this would have been, yeah, this would have been considered price from this low to this high. Balanced price range, old liquidity pool low. Look, it didn't even challenge it as it went up there. Went up there, quickly went down lower. So it's definitely in a hurry today. I'm gonna be frank with you. I don't think I see anything for trade today. Because if it's gonna be behaving like this in a very speedy fashion, if you're in it, great. If you were in it, just keep looking at it, monitoring your position. If you're someone like me and just not in it, then like don't even look at it. Just look at it after the fact or come back in the PM session. This wouldn't be a day I would want to waste my time on. Especially because it's Friday, end of week too. Let's see, 15. Okay, we also have this dealing range down lower. a dollar I'm looking at right now, and it's also selling heavily. So it should be, you know, a condition for risk on, but we're not seeing that today on US 100. Also take into effect, where is our first percent fair value gap? Right here. Just so happens to be on the event horizon too. But now as for heading down lower, I gotta consider where is the micro, the micro balance price ranges. That's an implied fair value gap, repriced up higher. This looks like a heavy reprice. So let's do a little quick demo. Oops. Don't want to see this repriced up to because it's a balanced price range. Should be at least. Especially after that reaction from the implied fair value gap. I mean, that's why it's a demo trade, right? Aiming for lower lows. This is an intermediate high now. Look at that SIBI. Traded up. SIBI is a buy side imbalance. Now it's buy side balance, sell side efficient. Sell side imbalance, buy side inefficiency. Buy side efficient, sell side balanced. This area now is balanced. Market as a intermediate high. We don't want to see price get up to these levels. We're definitely experiencing a little bit of heat here, but it's only in anticipation for the red folder news. I'm a little nervous, to be honest, because we could get stopped out easily. Let's see here. It could press it to shoot up and then continue down lower, especially because we're in this red folder. But I don't know, because it's just being what is it, ISM. It could act as just like a support on the move that's already been initiated. Just continue its repricing down lower. This is definitely a little scary, but we're trusting the fact that this is an intermediate high now, especially after rebalance this SIBI. So we're looking to see if that will continue the delivery as such. We got a minute now until the news opens, red folder news. The smartest thing you can do is probably close some of these. Okay, maybe close half so you don't lose as much, and then just keep the gains that I earned this week. Because we're actually up on this demo account. Okay? But there's that greedy in me that wants to see this price just behaving the way I want it to. There's that ego again playing. Like, no, I want to trust the fact that we're going to continue seeing lower prices. Especially with the sponsorship of Red News folder event. And we're looking for a scalp to here. So what even was that? Got it on the order block. High here. Seeing if we can get down to these levels. We also should be updating our markings, right? What do we have here? We have another type 2, referring to these highs. 59.60. Okay, then we have a high to low. And then lastly, we have this. 1 to 1. Crazy. But nope, you're very eager today. You really want to see price go down to this level. Now we have a new entry, the high of this. How many handles would that been? No way. 736, that's 70 handles? Wow. So when I opened up the stream, I said that we were going to be reaching down to event horizon, which was the equilibrium price and the 25% quadrant level. Did we end up hitting that? Which we did. I'm anticipating it to reach over down there. So we'll see if that unfolds. Reaching down to here, reacting off turtle soup above the sold high, okay, and then sell it down lower. Next trade would be up here, OTE. Maybe we don't have to be so aggressive. Why not just sell like 4 or 3? to break even because time's up. We also have this high to low. Let's see here. Okay, so then we have this bullish breaker here. Let's see if that will be treated as support, this old high here. The high at 951. Let's see. Bending up higher. Next trade up, this. Taking the bodies only and looking for an OTE. I think I'm gonna cut the stream around 10:30. I'm not really liking what I'm seeing today. Oh, look at that. So even though we've referred down to these lows already via our Dow Jones right here, yeah, very low, lower, low, and we refer back to these lows as well, low, lower, low. That's why I'm looking for these lows to get taken. But when it came down to it, look at this, low, higher low. See that wick on US 500, low, higher low. Same as this candle right here. The low here, low, higher low. Here, even though we tapped it here, coming back down here again, we didn't quite tap it. We could be looking to fill this type 2 dealing range from this high to this low. If that's the case, going long here would be a great buy, right? This is still like a it's an order block here. These are the ones I'm testing out because I really suck at these, you know. Okay, I really suck at these render types. Hang on, guys. This is me just trying to practice right now because I know these lows were already referred to going down lower, but as we're making this leg up, I'm trying to still understand how to navigate through that phantom leg because that's the most challenging time. And there are some criteria, things I'm thinking about how the market uses old lows, even though they were reclaimed by a different correlated market. Treating them again, how it can repel price like this low. This is not random. This swing low here, not random at all. We had this swing lows that were, even though they were referred to earlier, as they were being referred to again, they were not tapped on the other sister, on the US 500. We're also seeing this type 2 dealing range. So how can one get involved? That's what I'm trying to understand.